to Fondy Famous. I'm your host, Kelly Northley with eXp Realty. Today we are doing Mortgage Mondays here with Stephanie Core, and I'm going to let her take it away. We're going to talk about credit today.
Yeah, so Stephanie Core with People's Home Equity, a loan originator here. And credit is a huge topic of conversation when it comes to wanting to purchase a home or refinance even. And credit's one of those things, if you don't use it, you're going to lose it. Right? So paying cash is great. I love if you are able to be on a budget and pay for cash for everything. However, when you have big purchases like a car or a home, typically, those can't be financed out of pocket, right?
Be nice. It would be nice.
It would be nice. But that's where we come into play. So I just wanted to, preface everything with absolutely connect with a local lender, a local credit expert for your individual consultation, because everyone's credit situation is different, right? Sometimes you might go through some rough periods and patches, you might be working to rebuild your credit, or you might just want to maintain, a good score. So, when we're talking, really there's a couple major reasons why credit is super important when you're qualifying for a home loan. And the first is that there's often minimum credit scores to qualify for the different loan programs. Some have, minimums of 640, some are down to 550. So it really just kind of depends what loan program and what type you're looking to finance.
Okay.
The second, biggest issue is your interest rate. Credit score is one of the biggest things that determines your interest rate besides the loan program. And if you have, not ideal credit versus excellent credit, you're going to end up paying a little more in that rate. So just as an example of, using some rates I'm just picking out of the air, Kelly. Yep. So if you have excellent credit, in today's market, maybe you're paying a 7% interest rate. If you have not so ideal credit, you might be paying up to a percentage more, maybe up to 8% on that interest rate. And what's the average home price right now? Around
$200,000-$300,000.
$200,000, right? So, if you're financing about that $200,000, that is about $140 difference in a monthly payment.
Wow.
Yeah. Can you imagine over 30 years? That is almost $50,000 extra you'll pay in interest over that 30-year period of time.
Just for having a not as great credit rate. Correct?
Exactly. And that's just on the interest rate too. Your credit rating also goes into your insurance.
Right.
Right. So, if you've had some claims or, different things that way, your credit score affects your insurance rates as well.
Right. Okay.
Yeah. So some basics on credit. Credit range, what's good, what's bad. Credits run from 350 to 850 as far as those scores. There's 3 major credit bureaus: TransUnion, Equifax, and Experian. And they all have a little bit different rating or factor to who is reporting to those credit bureaus. So that's why you might see different numbers for the different bureaus that are being pulled. Okay.
Tell me a little bit about medical bills and things. How does that go into play with credit?
Yes. So medical bills, if you're just getting that medical bill, it has not gone to collections or anything yet. It doesn't affect your credit at all. It doesn't show up as a monthly bill or an outstanding balance. If it did get to a collection status, it'll show up on your credit report. However, in July of 2022, there was a law that was passed that now if you pay off your medical collection in full, they're required to delete it off your credit report. Okay. So on the mortgage qualifying side, we don't necessarily, factor that in, as a payment or something that would have to be paid off.
Medical debt?
Medical debt,
okay.
Yes, medical debt. However, it does affect your credit score. So sometimes we do advise to pay those things off so that we can boost your score.
Okay. And what happens if you miss a payment, you're late on a payment, and that hits your credit? How do you recover from that?
Well, that is, one of the biggest percentages of your credit score is your payment history. So immediately you're going to see a big drop in that. And unfortunately, the only way to combat that is more positive credit history after the fact or after that event happened. Okay. So you actually want to keep that account open and make as many more payments as you can to offset that, that blip.
Yeah.
Yeah. So don't pay it off right away. Actually, make payments on it would be a more prudent thing to do.
Okay. And what are some ways that people can improve and build their credit, especially if they're getting ready to purchase something big?
Yes. So if you already have credit established, make sure that you do a review on that. There are a couple, free credit trackers and different things you can kind of get an idea of what your credit looks like. myfico.com is the only official FICO score approved where you get all the information, but you can still get some good information from other credit trackers. So knowing where that is and then taking a look, making sure there's no negative information reporting like late payments, collections you didn't know about. Also we can take your current accounts, pay down those balances on credit cards is one of the quickest ways to boost that score up if you're using a really low utilization on your credit.
Okay.
If you have no credit, there are some things that you can do to get like a secure credit card, start building that credit. Some banks and credit unions offer credit builder loans that can get you started with installment loans, but really having a mix of that debt, is a good way to get started.
Okay. So having a little bit of a credit line so that you're using it regularly, paying it off regularly, and then kind of building from there. Exactly.
The biggest thing is just make those monthly payments on time.
Right.
It's so silly, if you have a $25 missed payment, it's a couple coffees, during the month. But that blip can really have a long-term effect on your credit.
Right. Wow. What are things that don't show up on your credit?
Wow, don't show up that are big issues, when it comes to lending or just in general.
Yeah.
Judgments. So judgments would be, things that maybe someone took you to small claims court to resolve, and then you were ordered to pay them some monies that hadn't been paid in full yet. Those don't show up on credit, but they do show up on the title search. So there will be an issue in perfecting the title in that transfer of property.
Right.
Some other things are liens, like child support liens or tax liens, things that are owed, to the state or federal government at that level. That can also become an issue, and they don't show up on the credit report in any way, shape, or form.
So how do you find out about those then? Is it just through the loan processing? I'm asking, I had a client who had a large payment due to a child care situation, and they couldn't purchase a home, but how would they have? They probably knew that, but
Yes.
It wasn't discussed in the process. So
Sure.
What do you catch that?
So we do a lot of checks on the mortgage side. There's a fraud report and some other credit things that we do check. If you're looking just on your own self, you can check the Wisconsin Circuit Court access. That's public records. And then there's like a child support lien docket, that's kind of checked as well.
Okay. So if they don't tell you, you have to wait all the way through that process, huh?
Some lenders will take a look at that stuff beforehand if there's maybe some information that would cause that to be a concern. I know no offense to anybody, but everybody gets checked in my books, just because things like that can get overlooked. There's not maybe a specific question that says, hey, is this out there? There's a couple declarations in the application that may allude to that, but if you're just kind of trying to rush through the process, it might be missed on the front end.
Interesting. Okay. And what about paying off debts or not paying off debts?
Oh, well, that's a great thing too. Talk to your lender first, okay? Like, honestly, especially around this time of year when people are getting their tax refunds, it might be very tempting to take that money and dump it towards, credit card debts or collections. So it really depends, because maybe that money is better used towards your down payment versus paying that debt off. So that's something that you can talk to your lender about. Like, do you need the credit score improvement, or would it be better served, for your funds out of pocket? One thing I will say is an older collection that, hasn't had any activity in a while, if you pay off that debt, you will actually see a drop in your credit score instead of an increase.
Wow.
Yeah.
You were trying to be proactive.
Right, exactly. However, so the way that those older collections work is they go off the date of last activity.
Okay.
So if that collection hadn't been reporting any, new activity in 3 or 4 years, you're kind of halfway through that seasoning process, and it's not in the algorithm of your credit score factoring as much. If you make that payment, that date of last activity renews and refreshes to the current date, and that is now considered, an active account and is, factored into your score a little differently in the algorithm. And unfortunately, any negative information, kind of tips the scales a little, more heavily than positive information.
Right.
That's why it's so important to kind of, clear out any negatives that you can, with the advice of your lender if you're in the process and really wanting to move forward. Because I've seen personally sometimes that happen and scores drop. We're no longer eligible for the loan program we had hoped for. So then we have to take a different look, which is usually a little more down payment or different rates type of thing.
Right. Okay.
Yeah.
So consult with a lender, obviously.
Absolutely.
Is there anything else that people should be doing to prepare, or that they can just kind of work on their own and getting ready?
And getting ready on credit. Just be prepared. Go to myfico.com, go to, Credit Karma, and those types of trackers are, like I mentioned before, good ways to look at stuff and get information.
Not always accurate.
Right. However, so here is where you'll learn Credit Karma, for instance, uses a Vantage score. Lenders use a FICO score, and the difference between them is really how they weigh the different items, payment history, inquiries, the utilization of that credit card limit.
Yep.
So it's weighed a little differently. So that's why you'll see a different score on, those credit trackers that are using that Vantage versus the FICO. And even in the FICO, there's multiple FICO numbers too. So if you get your credit pulled for an auto loan and then you get your credit pulled for a mortgage, you will have two different scores from that same credit bureau.
Wow.
Yeah. So
easier to buy a car though, just saying.
a little less documentation or approval process.
I suppose that's probably right, huh?
Yeah.
Feels like it should be more paperwork.
Well, it's a much larger investment for a home than an auto loan too, right?
Yep.
Yeah, you can flip that a little easier.
Yeah. Well, excellent. So if they need to reach out and contact you in regards to getting ready to prepare for a home or fixing their credit score even, where would they find you? Yeah,
so I'm always available for a consult, to kind of work and get that process started. You can reach me directly at 920-539-0834 or on Facebook at Ram Team Fond du Lac People's Home Equity.
Excellent. Thank you. Thank you for doing this again, and we'll be excited to learn more next month.
Yes, I love credit, so please reach out. We can definitely talk through all the details.
Excellent. Thank you.
Thank you.